Good evening, good evening. Nice to have you with us once again. This is something that comes up over and over and over again on this show. It's currency and trading in foreign exchange. It's a vital thing now because of the changes in legislation and the fact that you can take a lot more money offshore. But how do you actually start trading in it? We're going to look at currency and welcome into the studio John Cairns, currency strategist at Rand Merchant Bank. Evening, John. Nice to have you with us.
Thank you.
What is Forex trading? What are you essentially doing and what are you wanting to achieve out of it?
Well, Forex trading, why don't we take a step back? What is foreign exchange? So we've got the Rand in South Africa. Other countries have got their currencies, sometimes for international purposes or investing, international trade purposes or investing. You need to switch one currency into another. So that's foreign exchange. It's a massive market. In South Africa, $30 billion US gets traded every day in Rand terms.
What?
$30 billion worth of Rand is traded every single day. It's a huge market.
But I can't comprehend. I mean, how? Why are we buying and selling so much in foreign exchange?
International trade, everything you import and export. When you're investing in your unit trust putting money overseas. And foreign investors are bringing money into South Africa. And what's happening practically is importers are buying goods, bringing them in, but there might be a delay in the payments. They're having to switch their payment terms, etc. So it's an incredibly liquid market. It dwarfs, for instance, the Johannesburg Stock Exchange in terms of its trading. And it's probably, well, it is one of the two most important prices we have in the economy. So your first price is the price of money, which is your interest rate. And the second price is the price of foreign money, which is your foreign exchange rate. Those are the two most important variables for businesses and for determining our economic well-being in general.
Jeepers. Now, okay, that sort of put me on a back foot because I'm thinking I'm going over to the UK in September and I'd like to buy British pounds. And let's, for the purposes of this discussion, fix rates, okay? British pounds 11, the US dollar is 7, and the euro is 9.
Or
okay?
10.
Or 10, okay.
Yeah.
Just for the purposes of this conversation. So I'm now looking at buying a certain amount of British pounds to take over. And I'm thinking, well, let me hang around and see what happens because maybe I'll get it at 10.80 instead of 11. But are you talking these numbers? 10.80 to 11 is a massive difference in the market.
Yeah, it's a huge difference. And and another interesting fact about the Rand is it is the most volatile currency in the world. It's incredibly volatile. So all of us, if you just look over the past 10 years, in 2001 we went up to 13 on dollar Rand, been down below 6, we've been up to 11 again, we're back to 7. Very, very volatile. Makes very difficult for business and for just general consumers. It impacts via inflation. Very importantly, it impacts on your interest rates. It's a remarkably volatile currency and remarkably important in terms of its economic impact.
I was going to get to that later, but you've touched on it. We may as well deal with the issue now. Why is the Rand so volatile?
The most volatile currencies in the world are those that export commodities, South Africa being one, and those with high interest rates, high inflation and high interest rates, which makes you susceptible to speculative flows. So the carry trade, which is you borrow in a currency such as yen or dollars where interest rates are 0%, put your money in South Africa where you're going to get 5.5%, 6% on your cash, you're picking up a nice interest rate differential. That money is speculative, hot money, comes in now, all the times are good. The first sign of risk, that money floods out again and the Rand weakens dramatically. It causes a lot of volatility. So two factors, commodities and the high inflation, high interest rates that we have in South Africa.
But is that something that the Reserve Bank should be looking at this stage? Because there is a bit of an argument at the moment for the interest rate to come down.
Interest rates to come down or interest rates to go up? Yeah, okay, but so should the...
No, I mean, the unions are saying the interest rate needs to come down.
Okay, so there's lots of different arguments here. Okay, so first of all, go back to the $30 billion US of Rands traded every day and think how difficult it is going to be for the government or the Reserve Bank to influence the exchange rate at all. So if you're talking about trying to reduce currency volatility, the authorities are very, very limited in what they can do. And that's not just a South African phenomenon, it's across the world. Other countries try and interfere with their currencies, generally get burnt. Not always, but generally it's very difficult to interfere with the currency. Secondly, if you talk about this currency volatility, is it a big problem in South Africa? Yes. Well, petrol price is going up again because the oil price is going up. But now if the currency suddenly starts to weaken, then we go up to 15 Rand per litre. Imagine, right? I mean, we have big influences on our economy from movements in the exchange rate. So go back to what causes the volatility. Commodity, we're a commodity exporter, and we've got high interest rates. We're not going to change the fact that we're a commodity exporter, but we can do something about our high inflation in this country. If we can bring the inflation rate down to that of our trading partners, so reduce our interest rates, we're going to have less currency volatility in South Africa, which would help stabilize our environment, stop these huge swings in inflation and interest rates.
In a perfect world, let's say you're the Reserve Bank governor. In a perfect world for the Reserve Bank governor, what would our inflation and interest rates be sitting at right now to decrease this volatility on our currency?
Well, in a perfect world, South Africa, like the developed world, would have consistently low inflation at around 2% or so.
Okay.
And then depending on where you are in the economic cycle, the interest rate would be between 1 and 4% higher than that inflation gap. So 2% inflation with our interest rate varying between 3% and 6%. But before you can have those low interest rates, you first got to get your inflation rate down.
Okay, let's now go back a step, back to this trading thing. How do I get involved? Because there's obviously money in it. Well, no, there is money in it. Otherwise, people wouldn't be trading it. But how do I get involved? Can I get involved?
You can, increasingly you can get involved. But again, do you want to get involved? Okay, so this is, from a man on the street perspective, exchange rates are not an asset. It's not like you're buying a share on the JSE, which is going to go up when the economy does well, when the company does well. Okay, the exchange rate is the price of one money for another money. It goes up and down all the time. It's not, you can't invest your life savings in exchange rates. It's a nonsensical idea. But you can speculate in exchange rates.
Okay, so I've got some speculative money that I want to throw at the market and speculate. What are the instruments that are available for me to use to become involved in this trading?
Well, increasingly they're the online platforms where individuals can go and trade it, and certainly not my area of speciality. I wouldn't recommend people do that except for fun, just going and trading and speculating in currencies. But the more readily available tool domestically is the futures on the stock exchange. So currency futures listed through the stock exchange. Because of exchange control, we are still limited in how we can take money in and out of the country, but the futures are rand settled. So we take a contract out on dollar rand. At the end of the day, you win, I lose, vice versa. We switch rand. So there's no dollar foreign exchange moving, so it doesn't run foul of foreign exchange. So individuals can go on and speculate via the futures.
How risky is this?
Very.
And the returns?
It's
all over the place, I suppose.
Yeah, foreign exchange is not such as a fixed deposit, or fixed deposit's got an interest rate, or a share which has got a dividend flow. I mean, how are you going to make your money on foreign exchange is if the foreign exchange that you happen to own goes up in value. So it's almost like a 50-50 call in that sense. So again, I come back to the point, foreign exchange, except for advanced institutional investors, cannot be treated as an asset. Okay, it's a price that goes up and down all the time. It's not an asset like a share or a bond or a fixed deposit, all the other assets you deal with on your program.
Okay, then my question becomes, if you look at the buy and the sell price on foreign currencies that are published in the newspapers every day, or you can get them online, there's this 30 billion, and my mind still can't really absorb that number. I don't know about you, but 30 billion US dollars.
Yes, dollars, yeah. Traded every day.
There is profit in that, because somebody is buying at rate A and selling at rate B.
Yes.
Who are the people making that profit? Is that the banks?
Yeah, essentially the banks, or you can have your foreign exchange dealers, your bureau de changes on the side of the street for tourists. And yes, I mean that's what the banks do. We're buying and selling all the time. So at any stage, if you want to buy or sell, you can go to the bank and there'll always be the liquidity there for you because we're going to make the market for you. And like everything, there's a difference between the buy and the sell price, and we're making that difference. That's our role, provide the liquidity, and then our profit margin is the spread. So your next question is going to be the size of the spread. Yes. Right, okay.
Right.
The size of the spread. If Standard Bank, which has billions of rands deposited at the Reserve Bank and can trade billions of dollars, is going to deal with Rand Merchant Bank, our prices are very close. And then as you get away in terms of your credit risk and the amount of money you're going to deal, the credit spread is going to get wider and wider. By the time you go into your FNB branch, the spread is fairly wide because the bank's got to have the holding cost of keeping those notes actually there available, the transporting those costs, etc., the cost of the dealer sitting there. So then the cost becomes a bit larger, but the real liquid guys, Anglo-American, interbank market, the spreads are very, very tight. It's a $30 billion traded per day, very competitive market.
And there's a chance that the guys are going to get burnt on occasions?
Who, the traders?
Yeah.
The bank. Yes, so the bank is buying and selling all the time. So literally people are walking into F&B, Anglo-American and other big corporates might be phoning RMB, all that comes through to Rand Merchant Bank's dealing room. So there's a difference in the number of dollars bought and sold at any one stage. So there's a net position, which the trader then needs to manage and keep that position in order. So he can think, okay, he's now $60 million long position. In other words, he's got $60 million, right? Does he keep that position, or does he phone another bank and try and get rid of that position, try and find another bank who's got a corresponding position on the other side?
And I thought I was being clever by buying US dollars at R6.75. And these are actually talking about 30 billion. I wouldn't be able to do the job. I can tell you that now.